Every country on Earth is in debt. America owes 38 trillion, Japan owes 9 trillion, Germany, France, China, even Saudi Arabia with all that oil money, they're all drowning in debt. $315 trillion total. That's 3 times the size of the entire global economy. But here's the question nobody can answer. If everyone owes money, who exactly is getting paid? Follow that question long enough and you discover something disturbing. The answer isn't just surprising, it's designed to stay hidden. Because once you see how this system actually works, you can't unsee it. And what you're about to learn will change how you think about every dollar in your bank account, every tax you pay, and every promise your government makes. Let's start with the obvious problem. Debt is supposed to have 2 sides. Someone borrows, someone lends. I borrow $100 from you. I owe you $100. Simple. But when every country on the planet owes trillions, the math stops making sense. America owes 38 trillion. Who's collecting? Japan owes 9 trillion. Where's it going? The entire global economy is buried under 315 trillion in total debt. That's governments, corporations, and households combined. But if you add up every asset, every piece of property, every stock, bond, and bank account on Earth, you get a number smaller than the debt. The world owes more than it owns. That's not just bad accounting. That's impossible. Unless the debt isn't owed to anyone real. Unless the creditor is a ghost. Here's what they don't teach you in economics class. Money and debt are the same thing. Every dollar in your wallet, every dollar in your bank account, every digital dollar on a screen, it exists because somebody borrowed it into existence. When a government needs money, it doesn't print cash and hand it out. It issues a bond, a promise to pay back the amount plus interest. A bank or investor buys that bond with money that was also borrowed into existence from somewhere else. The government spends the money. That money becomes someone's paycheck, someone's tax refund, someone's savings, and the cycle continues. Money isn't created by work or production anymore. It's created by debt. If every debt in the world were somehow paid off tomorrow, there would be no money left. The economy would vanish. Not because we'd be broke, because money itself would cease to exist. Now here's where it gets strange. When you dig into who actually holds all this debt, you start to see a pattern. Take the United States. 38 trillion in debt. About half of that is held publicly, meaning someone outside the government owns it. 2/3 of that public debt is owned by American institutions, banks, pension funds, mutual funds, insurance companies. The Federal Reserve itself, the remaining third, about 9 trillion, is held by foreign countries. Japan holds about 1 trillion, China holds 800 billion, the UK, Luxembourg, Belgium, they all hold pieces. So when people say America is in debt to China, yeah, that's technically true. But it's only 2% of the total. Most of America's debt is owed to Americans. The Treasury prints bonds. Banks buy them. The Federal Reserve buys them from banks with newly created dollars, and American taxpayers pay interest on those bonds through taxes, which then flows into American retirement accounts. It's a loop. The debt is real, but the creditor is just a mirror. But here's the part that nobody talks about. That loop isn't just an American quirk. It's global. Japan lends to the US by buying treasury bonds. The US lends to Europe through the IMF. Europe lends to developing nations through the World Bank. Developing nations lend back to advanced economies by keeping their foreign reserves in Western bonds. Everyone owes everyone. It's like a poker table where every player borrowed chips from the person next to them. Nobody actually has money. They just have IOUs. And the only thing keeping the game going is that nobody stands up and asks to cash out. Because the moment someone does, the whole table collapses. So if the debt is just a circle and everyone owes everyone else, why does it matter? Here's why. The circle isn't equal. Interest payments don't flow evenly. They flow upward. Let me show you how this works. Governments borrow money by selling bonds. Those bonds are bought by banks, hedge funds, pension managers, and sovereign wealth funds. People with money to lend, then governments collect taxes from workers and citizens to pay interest on those bonds. So the flow goes like this. Workers pay taxes. Governments pay interest to bondholders are institutions and wealthy investors. The debt isn't just owed by countries to countries. It's owed by workers to capital. It's a transfer mechanism, and it runs 24 hours a day, every day, forever. Your taxes don't just pay for roads and schools. A huge chunk pays interest to people who already have money. That's why debt and inequality rise together. The system rewards people who own debt and punishes people who just pay it. Now let's go back in time for a second, because this wasn't always the plan. National debt, as we know it, was invented in England was fighting France and ran out of gold. So the king went to merchants and made them a deal. Lend me money now, and I'll pay you interest forever. Not from my pocket, from future taxes. To manage this new system, they created the Bank of England, and that's the moment everything changed. For the first time in history, a government could spend money it didn't have, and in exchange, lenders got something priceless. A piece of paper backed by the entire tax base of a nation. That piece of paper could be bought, sold, or traded. It became the first government bond, the ancestor of every treasury note, every sovereign debt instrument in existence today. France copied it. The Netherlands refined it. America adopted it to fund the revolution. And within a century, national debt went from a desperate wartime measure to the foundation of modern finance. Empires used to conquer land, to steal gold. Now they issued bonds to extract interest. The battlefield became the balance sheet, and the debt was no longer something to escape. It was something to manage, something to grow, something to make permanent. Because the people who lent money to governments discovered something crucial. As long as the government kept paying interest, the principal didn't matter. You didn't need your money back. You needed the payments to keep coming. And that realization is what built the world we live in today. Here's the thing most people never realize. Modern governments don't plan to pay off their debt. Not ever. That's not a failure. That's the design. When you or I take out a loan, we're expected to pay back what we borrowed. But governments don't operate that way. They refinance. They issue new bonds to pay off old ones. It's like rolling over a credit card balance every month, except they do it forever. Economists call it debt rollover. I call it what it is. A subscription model for money. The principal isn't the product. Interest is the product. The rent charged for keeping the system stable. And the global economy depends on that rent, like a shark that has to keep swimming to breathe. The financial system has to keep rolling debt to survive. The United States will never pay off its $38 trillion. Japan has been rolling over debt for decades and now owes more than 250% of its GDP. And yet, Japanese government bonds still trade near 0% interest. Why? Because investors don't expect to be repaid. They expect to be renewed. They're not waiting for their money back. They're waiting for the next bond issue, the next interest payment, the next cycle. That's what a treasury bond really is. It's not a liability. It's an asset. It's collateral. Banks use it to secure loans. Pension funds hold it to balance risk. Central banks treat it like money itself. If the US government somehow paid off all its debt tomorrow, the global financial system would collapse. Not because we'd lose the money, because we'd lose the instrument that holds everything else together. And that brings us to the most important player in this entire system, central banks. The Federal Reserve, the European Central Bank, the Bank of Japan. These institutions don't just manage money, they create it. Every time the Fed buys a government bond, it doesn't use existing dollars. It conjures new ones into existence. The bond becomes an asset on the Fed's balance sheet. The dollars it created become a liability. And those dollars flow into the economy as if they were always there, but they weren't. They appeared because someone borrowed. That's the secret. There is no such thing as debt-free money. Every dollar, euro, yen, or pound in circulation represents a unit of debt somewhere on someone's ledger. Currency is debt. Savings are debt. Even cash under your mattress is just a piece of paper that says someone somewhere owes something to somebody. Now here's where this gets personal. Because you might be thinking, okay, this is all abstract. Why should I care? Here's why. Every time this system is broken down, it's regular people who pay the price. Greece in 2010. The government couldn't pay its debts. Bond markets panicked. Interest rates spiked. The European Central Bank and IMF bailed them out. But the bailout came with conditions. Austerity, tax hikes, pension cuts, unemployment hit 27%. An entire generation lost their futures. And who got paid? The bondholders? The banks? The institutions that lent money in the first place. Argentina defaulted 9 times in a century. Every time, foreign creditors restructured the debt. Every time, ordinary Argentinians got poorer. Sri Lanka ran out of foreign currency in 2022. Fuel shortages, food riots, government collapse. Why? Because they couldn't make interest payments on loans they took out decades earlier. When the system breaks, the creditors suddenly become very visible. The IMF, the World Bank, anonymous bondholders holding entire countries hostage. But when the system is running smoothly, those same creditors disappear into the background. They're just the market, just the institutions, just the way things are. But make no mistake, they're there, and they're collecting. The United States spends over $1 trillion a year just on interest payments. That's more than the defense budget, more than education, more than infrastructure. Where does that money go? To whoever owns the bonds. And most of those owners are already wealthy. So your taxes, my taxes, they're not just funding government services. They're funding wealth transfer. From the bottom to the top. From workers to investors. From people who earn money to people who own debt. And here's the trap. You can't escape it by refusing to participate. Because the system isn't optional. Every dollar you earn exists because someone borrowed it. Every purchase you make circulates debt that someone else will have to pay interest on. Even if you save money, you're just holding someone else's IOU. Savings accounts, retirement funds, even treasury bonds in your portfolio. They all depend on governments and corporations continuing to borrow forever. If the borrowing stops, your savings disappear. Not because you spent them, because they were never really there. They were just promises stacked on other promises. And the whole tower only stands as long as everyone keeps believing. So who is the creditor? It's not one person. It's not one country. It's the system itself, a machine that turns promises into money and money into power. At the top of the pyramid are central banks that create currency. Below them are governments that borrow it into circulation. Below them are banks and institutions that buy the debt and collect interest. And at the bottom are workers and citizens who pay taxes to fund those interest payments. The system calls itself capitalism, but it's not based on capital anymore. It's based on credit. And credit only works as long as the next generation agrees to keep paying for the debts of the last one. Right now, global debt is $315 trillion. Global GDP is about $105 trillion. The debt is 3 times the size of the entire world economy. And it's growing faster than production, faster than wages, faster than population. The machine is accelerating. And the only way it keeps running is if nobody asks the question you just asked. If every country is in debt, who's the creditor? Because the answer is uncomfortable. The creditor is us. And also not us. It's the system we're trapped inside. A system where debt creates money, money creates growth, and growth requires more debt. It's a loop with no exit. And the people at the top of that loop benefit the most, while the people at the bottom just keep paying. If this changed how you see money, hit subscribe. Because once you understand how the game is rigged, you can't go back to pretending it's fair. And there's a lot more to uncover.